Thank you for returning to our channel. We'll talk about how many Tesla shares you'll need in this video if you want to live off of the shares' passive income, though. A lot has happened since the split. We recently looked at the number of pre-split shares required to retire. With critics hurling themselves at Elon Musk from every angle, the future of Tesla appears to be in doubt at this point. However, this is advantageous to those of us who think Elon will succeed. We may spend less to acquire the magic number of Tesla shares required for retirement because they are currently available at a significant discount. To learn more, keep watching, and don't forget to subscribe and like. This movie will concentrate on the bear case, or the worst case scenario, put out by ardent Tesla supporter Cathie Wood. I'll walk you through all of Tesla's advantages, which will probably make my bear case too cautious. According to the bear scenario, Tesla will sell 10 million cars for an average of $38,000 auto sales, would bring in $372 billion as a result of this, although the actual amount should have been $380 billion. So the bid, $380 billion. So the 10 million figure is a bit of an exaggeration. Remarkably, Tesla's robo-taxi services are not included in this calculation. It is astounding that Tesla's robo-taxi or driverless ride service is valued at $51 billion. What's even more noteworthy is that, as of Q4 data, Tesla's gross margin on electric vehicles has increased to 46% from 28%. Tesla's gross margin is expected to soar to 50% by 2026. As the entire EBITDA margin was just over 23% in Q3, the estimate of 37% by 2026 is astounding. The margin is predicted to reach 37%, indicating high efficiency. How they determine the enterprise value for 2026, as opposed to how we currently compute it, is what has me intrigued. At least for me, there are some questions about the capacity to forecast that far into the future. Although I think that Tesla might deliver 9.8 million vehicles, their estimates for debt and cash by 2026 may be optimistic. According to some forecasts, they should deliver at least 7 million by then. We'll watch how things work out. Based on total gross profit after costs, Cathie Wood projects a 50% gross margin, which would generate close to $250 billion in sales and support a $967 per share or $2,900 pre-split stock price. Nevertheless, Wood and ARK relied on enterprise value by EBITDA in their graphic rather than operational margins or costs. We will have to wait and see how they arrived at Tesla's stock price and market worth of $3.3 trillion by 2026, as enterprise value takes debt and cash into account. However, it's reasonable to assume that this would be reasonable if Tesla were to reach a 50% gross margin and a 30% operating profit by 2026. In summary, the bear case presented by Cathie Wood indicates a pre-split stock price of $2,900 per share, which translates to approximately $967 per share. After the split by 2026, Wood is expected to be worth $4,600 per share, or $1,533 per. A safe retirement amount is $1.7 million per person, citing a recent survey in light of this. In the worst situation, 1,108 Tesla shares would be required. Since Tesla shares are currently trading at $123 a share, you would need to spend roughly $136,400 in order to achieve the threshold for retirement that is assured. That's not too awful. Let's now examine current market trends. Considering the recent developments, I think the bear case is overly cautious. In recent weeks, Tesla's stock price has declined multiple times with negative trending data. The company has seen a number of ups and downs. However, given the low price of Tesla shares right now, can investing now enable some people to retire on the basis of projected future gains? Depending on how the market develops and how well Tesla manages it, it is definitely a great moment to get Tesla stock given its market potential. If you invest in Tesla stock, how many shares would you need to own in order to retire by 2027? Although Tesla has seen declines and there might be more in the future, the declines are anticipated to be small. Given the stock's potential, whether Tesla can reach a high price by 2027 is the true question. Though Tesla was once deemed overpriced by some analysts, it has reliably guided us into multiple bull markets. Along with entering new markets and collaborating with other companies like Lucid, Rivian, and NIO, the company has extended its production and broadened its market reach. Wall Street investors predict that by 2025, Tesla's stock might reach above $2,500. Cathie Wood even projects that by 2030, the stock would be valued more than $3,000. These projections are supported by in-depth analysis of Tesla's stock performance and prospects. Tesla has dramatically boosted production and delivery over the last 2 years. In the most recent quarter, the company delivered 108,600 vehicles, exceeding consensus projections. While many employees eagerly await retirement, very few make the sacrifices necessary to guarantee above-average financial security in their latter years. In order to retire in 5 years, how many Tesla shares would you need to own in your portfolio? Now let's compute. According to a recent survey, the average person would need $1.7 million to live well in retirement. Considering a more optimistic scenario than Wood's bear case, you would require about 850 Tesla shares if the price of a single share reached $2,000 in 2027. Considering the price of a Tesla at the moment, this would involve spending about $104,000. This might result in large profits if Tesla meets forecasts. The Model 2 and the humanoid robot are two of Tesla's next initiatives that have the potential to transform entire industries and skyrocket the company's value. With production finally starting following delays owing to a lack of 4,680 battery cells, the Cybertruck is also scheduled for introduction in the near future. What's even more fascinating are Tesla's intentions to build autonomous robo-taxis. These vehicles have the potential to revolutionize commercial transportation since they are built to provide the lowest cost per mile of transportation. Tesla will be well ahead of the game if it can overcome the difficulties associated with using renewable energy for these cabs. Given the company's solid reputation and competitive position in the industry, investing in a growth stock like Tesla could make sense as a retirement strategy for 2027. Few people take the required actions to guarantee a financially comfortable retirement, even if many wish for one. It's critical to make prudent long-term investments because inflation will affect traditional retirement plans such as the 401k and IRA. Therefore, the amount of Tesla shares you'll need for a secure retirement may vary depending on your annual costs. Please share your thoughts in the comments section below. Give this video a thumbs up if you think it was helpful. And if you're new to the channel, make sure you subscribe and enable notifications. Until the next video, see ya!